All right, this is part 2 to the video that I just posted a little while ago. If you're watching this first, I recommend you go back and get the other half. The other part of my crypto tax strategy, which really is the most important part. Number 1 is having the trust. Number 2 is having the LLC. The LLC is going to own the wallet, the trading account. It's going to buy and sell crypto. That's all going to pass through on the trust tax return. Here's the deal. When your profits go into the trust bank account, that is a normal bank account. That money is going to be with Wells Fargo or Chase or whatever bank you choose. When your profits go in there, they don't make more money. Just like when you put money with Wells Fargo right now, maybe it's in an interest-bearing account where you're getting like 0.0001% or something, but you're not actually growing wealth when you put your money in the bank. This is where we use a whole life cash value life insurance policy that is designed correctly as a modified endowment contract, which won't matter when it is owned by your trust. Your trust is not subject to capital gains tax. When you own a modified endowment contract, that means that you're overfunding that cash value policy to the point where the IRS is going to send out a 1099. Because again, the government doesn't want you making too much money on life insurance, and they don't want your money in a whole life policy because the government, the IRS, creditors cannot touch your money in a whole life policy. So again, the last step is that you have the trust. The trust owns the LLC. The LLC does all the crypto trading, cashes out the profits. The profits pass through to the trust tax return where we could legally defer the taxes. Now, because the trust is going to own the life insurance policy, it's going to be the owner and the payer and the beneficiary, which means that the trust can legally use its tax deferred money to fund that life insurance policy. And it's a modified endowment contract, which means you're going to be putting a lot of money through that thing, which means you're going to produce a huge death benefit for your family. You're also going to have cash value that you can borrow against. And we're using the insurance company literally as a bank. Now, there's more to this. If you want to learn more, click the link in my bio. You can have an appointment with me and my team, and we can show you exactly how this will work for you, your family, and your business. Let's make 2026 a huge year, which means you need to get these tools in place before then. As always, love you all.